So our first presentation examines how company acts of socio-political activism, such as Nike's support of Colin Kaepernick's actions or Delta's challenge to the NRA and gun control, impact company performance. Professors Bhagwat of Texas Christian University and Nooshin Warren from the University of Arizona join us to share their findings. Welcome, Yash and Nooshin.
Thank you. We are so excited to present our findings from this recent research project. There we go. Recently, you may have noticed many firms have publicly supported Black Lives Matter, but this phenomenon has been gaining momentum for the past few years. For example, Nike made headlines a couple years ago for releasing an ad campaign featuring the polarizing Colin Kaepernick, who protested police brutality by kneeling during the national anthem. Target drew attention for enacting an inclusive bathroom policy in support of transgendered rights. Starbucks launched a campaign to encourage discussions about race relations. Doritos released a rainbow-colored chip packaging in support of LGBT rights, and Delta very publicly discontinued a discount offered to NRA members after the Parkland school shooting. What makes these examples noteworthy is that traditionally, companies have stayed silent on controversial social issues due to the risk of inevitable backlash. Images of people burning their Nike shoes went viral on social media. However, despite backlash, these recent acts may be in response to changing consumer demands. In fact, in a recent survey by Edelman, 64% of global consumers said they would buy or boycott a brand based on their beliefs. Importantly, this is a trend really gaining momentum, up 11% from the year prior. More and more, we are seeing that consumers want brands to have meaning. Traditionally, we have said that marketers have had to make strategic decisions about four things. The four P's: product, price, promotion, and place or distribution. We think marketers may now have to make decisions about a fifth P, or purpose. One way firms have tried to establish a sense of purpose is through corporate social responsibility, CSR. They have donated to philanthropies, cancer research, and environmental causes. Things we all can probably agree are good things. But if you think about the examples we've talked about, they are highly controversial. When you see a firm stand up for a cause, it probably grabs your attention because this is something new. We defined these acts as corporate socio-political activism, or CSA. What really sets it apart is the issue. Socio-political issues lack societal consensus as to what is right or wrong. All of us in this webinar have varying opinions on issues like gun control or abortion. So marketing has evolved over the years from a focus on production to sales to meeting the needs and wants of customers to the most recent era focused on customer relationships. The focus recently has been on utilizing data analytics to encourage long-term, profitable customer relationships. But going back to the quote from Edelman, there has been a shift in what consumers want out of relationships with brands. Customers no longer just derive value from the functionality and low cost of products. Now they also derive value from engaging with companies who stand for something and do the right thing. And while consumers are increasingly demanding their brands to stand up for social causes, executives are uncomfortable with this. In a recent edition of the CMO survey, only 19% of CMOs felt it was appropriate to engage in activism. Yet 90% of them also believed activism would help their brand stand out, and 83% of them thought it would help attract and retain customers and other partners. This puts managers in a difficult position. Customers are demanding that they stand up for what is right and are increasingly making purchase decisions based on a brand's values. Yet, in the case of socio-political issues, What is right is in fact debatable, and there will be inevitable backlash. Furthermore, Wall Street cares primarily about profits, which leads us to ask, what are the financial consequences of standing up for a socio-political issue? We examined two reactions, one from the stock market and two from customers. And Nooshin will now talk about these financial consequences.
So to find the answer to these questions, we collected data to help us answer it. And our data is all the events, all the CSA events that happened between 2011 and 2016, which is from 149 firms in various industries. Our data covers a variety of firms and industries and also different socio-political issues, which are classified as controversial and partisan by Pew Research Center. You can look at some of the examples here, which are from racial equality to LGBT issues to gun control and so on. Our samples covers both liberal and conservative activism, and it covers different types of activism, like pulling down merchandise, creating ads, manufacturing products, or issuing a statement. We use this data set and investigate the financial consequences of these CSAs. There's several ways that we can actually estimate financial values of a firm action. One way, which is forward-looking, meaning it predicts the value from the future and is a common practice, is to study the stock price movement. The assumption here is that the collective wisdom of investors will predict the net present value of each firm's action as soon as investors learn about it. So we monitor the stock price changes for each one of the CSAs. For example, JCPenney issues an ad that has two dads for the celebration of Father's Day. We look at 1 day before to 1 day after this ad is publicized and look at the stock price changes and see a sharp decrease in the stock price. This is because investors generally perceive these types of actions as risky. They think that when firms do these actions, they're taking time and money and resources from the firm, which would go into profit maximizing actions, and they divert it into something that is controversial, and it is going to upset a large portion of the population. On average, we see a negative 0.4% decrease in the stock price change when firms do activism. Now, this number might seem trivial, but to put it in perspective, for a firm like General Electric with $600 billion in assets, this is about $2.5 billion decrease in value. Even for JCPenney with lower assets, it's $45 million, and for smaller firms like Nationwide, it can still translate to $500,000 decrease in value. So it is considerable. Now, we do see this negative reaction in general, but when we dig deeper, we actually see that some firms are receiving positive stock changes. There is a large variance. And to explain this difference, we studied more to see what investors take into account when they are going to predict the net present value of an event. What they do is basically predicting the likely outcome of the event and then how much cash flow it's going to bring for the firm. In terms of activism, we know that these controversial issues are going to upset a large portion of the society. But to investors, it matters if that large portion that are offended or aggravated are related to firm and influence the firm. For example, are they customers of the firm? In the case of Target, when they had their policy for all-inclusive gender bathrooms, a large portion of their customers got upset and boycotted Target. It's not just the customers, even employees. If they're not on board with the activism of the firm, they can disrupt productivity and sales. In the case of Wayfair, they contracted with the government to furnish the immigration camps in the Mexican border, and their employees walked out because they were offended by this. Investors also look into the government, the state legislators for these firms. If your firm is headquartered in a state, the government of that state and the regulations of that state matters. It can change the tax structure, it can change the subsidy, and so on. For example, for Delta, when they took out the NRA discount, they're in Georgia, a conservative state, and the governor rescinded the tax benefit and cost them $40 million. So investors do care that stakeholders of the firms are the ones who are supporting or are opposing the firm's cause. So what we did was dividing these activisms into the ones that are aligned with the stakeholders and the ones that are misaligned. For example, if a firm has a liberal cause and their customer base is also liberal, they're aligned. But if the customer base is conservative, then they're misaligned. And we see that there's a positive reaction by the investors to the aligned CSAs and a very negative one to the misaligned. The same happens when the firm is misaligned with their employees or government as well. Although when we look at these results, generally we see that investors are more sensitive toward customers and legislators than they are towards employees. This also translates into sales. We actually see that both in the quarterly sales and the annual sales, there is an increase of about 8% when consumers are aligned with the cause, and about 2% decrease when they're misaligned. This shows two things. One, alignment of customers matters, but two, boycotts seem to be dying down sooner than when customers are on board and basically they are boycotting and buying into the firm. So we see that the alignment matters, and obviously if you're managers, we want to try to align our cause with our stakeholders and know their political ideology. But many of you might not be a member of a lucky firm who has all their stakeholders aligned and on the same page. There are many firms, in fact, that have stakeholders that these stakeholders do not see eye to eye. An example of that would be Whole Foods. Their customers and employees are liberal, but their government in Texas is very conservative. It happens to Target with their customers and governments on board, to Abercrombie & Fitch, and many other firms. There are very few firms like JCPenney that they have their customers, employees, and governments all on the same page. So when they have all or none, then it's a straightforward decision. If all my stakeholders are aligned with my cause, if I have a conservative cause and all of my stakeholders are conservative, then I will get rewarded by the stock market and by the sales market. And if they're all against, then I will get punished by both investors and by consumers. Investors generally look at all the stakeholders of the firm. Even if you have two of your stakeholders against your cause, they are going to be punishing the firm. They still will perceive it as a risky event, even though if you have your customers on board, you might see an increase in sales. This risk alleviates when we have two of our stakeholders on board. Then we see a punishment or no punishment from the investors. And another thing that we need to pay attention to is that as long as we have customers on board, we see increase in sales. So all in all, this shows us, one, stakeholder alignment matters. Two, consumers really care about the cause and will reward or punish the firm. And also, investors have a holistic view on all stakeholders of the firm. But that is not the only thing that they're going to look at when they're predicting the stock price and cash flow of the firm. Now, Yash is going to tell you a little bit more about other aspects that they're going to look at. Yash?
Sorry, I was on mute. Investors really care about how CSA will affect stakeholder relationships because they can directly impact cash flow. But they're also trying to decipher hidden information about the firm, particularly what the firm's strategic priorities are. CSA can signal how willing it is to commit its time, resources, and attention to a risky social cause versus traditional profit-generating activities like innovation. How CSA is implemented may signal key information about the firm's strategic priorities that are not explicitly stated to investors. So the first cue that we look at is whether the CSA took the form of an action versus a statement. For example, in response to Black Lives Matter, Sephora has now committed to reserving 15% of its shelf space to Black-owned businesses, while Amazon released the following statement. What we found was that actions do speak louder than words, and they spook investors. Investors punish CSA in the form of action. The second cue that we looked at is who actually announced the commitment to the CSA. We found that investors punished CSA announced by the CEO versus other firm representatives, mainly because the CEO announcement signals a more serious commitment and a diversion of firm resources. And in this image, you actually can see the CEO of JP Morgan Chase kneeling as he announces his commitment to Black Lives Matter. The third cue that we looked at is when firms justified their CSA as being good for business. And we found that this justification alleviated investor concerns. For example, when Salesforce decided to halt business in Indiana after a discriminatory LGBT bill, they explained that they were acting to protect their customers and employees. And finally, investors also were less punishing when firms announced their CSA jointly with other firms. So when firms, for example, firms wrote and signed letters together in support of same-sex marriage, this made the CSA less risky as there was safety in numbers and the potential for backlash would be less concentrated. So what does this mean for managers? First, in sum, managers are in a tricky situation, and we feel like these findings can really help inform decision-making. If a manager wants to engage in CSA but is concerned about the financial outcomes, the first thing he or she should do is to examine the values of the firm's stakeholders. How will your customers, employees, and state legislators feel about your position? Customers are particularly important not only because of future sales, but because investors are particularly sensitive to customer alignment. Second, prepare for the financial consequences. You may receive backlash that is realized in terms of stock market reactions and sales. And finally, be mindful that how you implement your CSA matters. It signals what your priorities are, both in terms of your financial responsibilities as well as your authenticity. And with that, we are now open to questions and comments.
Thank you, Yash. Thank you, Nooshin. Really appreciate the important insights. So as Yash said, we now have some time for questions from all of you. Again, if you'd like to ask a question, go ahead and type it into the Q&A tab on the left side of your screen, not the studio chat tab. So we do have some questions that have already been submitted. One question from Domenico was about, is the stock price changes that you've observed, are they sustained over time?
So when you look at the stock price and in terms of looking at the net present value for the future, that change basically tells us what investors believed at the time. We did look at the long-term effects, and we see that to some extent, and especially compared to their very close competitors, this actually is sustained unless changes happen into the composition of the firm or into the society.
Okay, thank you. And Laurel is asking a question, and this dovetails a little bit with our next presentation about media, but how do you think investors are typically informed about their, Laurel asked specifically about their tolerance for activism, but we may also ask the same question about the degree of alignment. How do shareholders actually assess that?
This is a really interesting question, and it also was a question that opened up a new market for some firms to give this information to investors. It is easy to see where your state legislators stand, but it's obviously more difficult to see where your employees stand, or where the firm's employees stand and where the consumers stand. Now, we have third-party firms that are trying to give this information to the public and specifically to investors. There are firms, Second Vote or Just Capital or some firms like this. What they do is they run very large surveys on the consumers to see where their political ideologies stand. They also provide the publicly available information about employees' donations and employees' political ideologies to basically give this information to investors. For our own study, what we did is we collected this information ourselves. We ran studies on consumers of different firms and asked them their political ideologies, and then used that average.
And to jump in, one thing that we did was we actually just asked for what people's perceptions of a company's target market are. So on the one hand, investors definitely have access to data, but they probably also just have their own perceptions, where they might say, hey, we think that Nike's target market is definitely more urban and more liberal, and they make assumptions based on that.
Mm-hmm. And it goes a little bit to your point there about persuading that the company is not helpless with regard to the degree that it can provide information about these markets and the degree of alignment. So it can be proactive in that sense, right?
Sure. Exactly.
Well, exactly. I think that you're seeing that more and more firms may actually start positioning themselves differently based on their customers' values. So CSA might actually potentially one day be a customer acquisition strategy as well, if they want that.
Oh, that's interesting, because there, as you said, there are, especially among millennials, there's a lot of consumers, and I think more and more across the board, there are consumers that really want to be engaged with companies that are active in these ways, because when you give your money to a company, you want to know that they represent who you are, right?
And it's interesting that you say that, because initially, I think the survey results were showing that this was really a millennial-driven phenomenon. And I believe that the latest surveys coming out are showing that actually this is across the board globally and by age. So it's not just millennials anymore.
Well, that's interesting. So Monica has a question about, and this goes a little bit to the proactivity that we were discussing, but based on your research and then any additional thoughts that you've had, because I know you've been working on this paper for a couple of years and the data is just so rich, how do you actually prepare? How should companies think about preparing themselves for this backlash?
Well, this is where all this last part of our presentation comes in, that a lot of firms do have this actual belief or cause that they want to stand up for, no matter if they have their stakeholders on board. So what should they do? One way to do this is communicating this well with their investors, maybe explaining the business benefits that this might bring for the firm, the interest in the future, or maybe even, as Yash was talking about, the opportunities for acquisition of new customers would be one way to communicate it with investors. Another way is to make alliances with other firms and try to alleviate the risk for their firm. So each and every one of these aspects that we will look at can be used to diminish the risk for the investors, or at least the perception of that in the eye of the investors.
And to add on to that, I think what they might want to really look at is what specifically do they expect to happen to them. So is it the case that your state legislators are going to really, punish you? Or is it that you're going to see a dip in sales? And if you might be okay with that dip in sales if you want an entirely new kind of customer anyway. So I think it's really a question of examining those stakeholders and saying, okay, what can I expect from them, and am I okay with that?
That's a really good point. We've had a couple more questions. One from really a thought from Alok about the role of political disclosures and how those affect customer and investor responses. So that's something maybe to put on your future research agenda. And then Charles asks an interesting question I think is important for the audience to really appreciate what's distinctive about these CSAs. So he asks about, and he notes that many companies have decided to stop advertising on Facebook. And he asks, is this considered a CSA? And did you take into account this type of firm interaction? But your CSAs, and this is one of the things I found very compelling about what you did, which is that you made the important point, which had not been made in the literature, about the fact that these are politically divisive events. And this is where the alignment is so important, because some people will line up and some people won't. And that really is, and so if there's, and that's what creates the risk. So maybe you can reflect a little bit on that and respond to Charles.
So our data was not to the part that Facebook's scandals were involved. However, we did, in fact, take into account these types of interactions, because to us and to our definition, what counts as an activism is any act of the firm that conveys that they're standing up for a cause and making a statement, and also basically partisan divide between the people in the society. One example that actually was in our slides, which is when those pulled down their advertisement from the reality TV shows, All American Muslims. So that also is an interaction of a firm with another firm taking their ads off, but to make a point that is a partisan point. So yes, we do have those types of interactions in our data and in our definition of activism, definitely.
Okay, and I see Niraj. Go ahead, Yash.
I was going to say, I think the question here is just, I think the reason that those companies are boycotting Facebook has to do with hate speech, and they want Facebook to control that. And then the question really becomes, is that really partisan? And if we would say that, conservatives would mostly say, hey, hate speech should or should not be controlled versus liberals, then at that point it would be considered CSA. So the question is really just how partisan is it?
Exactly. And in the case of Facebook, it kind of became partisan just because of basically after the election, all the ad campaigns that happened on it. It's basically right now a politically charged firm in consumer discussion.
Let me finish with one final question, which is from Catherine, and this is not really what you did your paper on, but it's such an important question. I hope that you or some of the other, I see a lot of faculty on this webinar with us too. Why do companies engage? What initially prompts them to engage in this type of socio-political activism? Do you have some thoughts on that? What triggers that? Because there is an initial event, right?
There is. So I think that initially a lot of this had to do with CEOs using their platform for things that they just fervently believed in, particularly, Howard Schultz for Starbucks, or kind of like these celebrity CEOs. And I think that it came from an increased polarized society that now businesses feel like they can really take on the role of changing society, which previously they didn't want to do. But I think it started with CEOs that felt compelled and potentially customers that demanded it.
Mm-hmm. Well, there's definitely a big opportunity. I think that's what I would call a dissertation-worthy idea. What triggers that? Because then it creates a cascade, my guess. And it's an empirical question. But I think it's important to managers because my guess is that we have people who are attending today that would like to see their companies engage in this, but it's not clear what actually triggers it. So, well, let's go ahead and thank you both, Yash and Nooshin, for a wonderful presentation. Thank you.
Thank you. Thank you for listening to our talk.